Everyone. Today is Wednesday, December 11th. This is Brad Matheny. This is the Plan Your Trade video, and CPI data just hit. Let's take a look over here. CPI data came in at 0.3% for core month over month and 3.3% for core year over year. Came right in with expectations. CPI index slightly higher. So understand that this is again showing that the pricing index is rising slightly. If you take a look here at the year over year, you can see that we're seeing elevated price levels. You can see right here, 2020 all the way back, and you got to go a long way back to 1980s and 90s to see more elevated pricing levels. So you remember back here in the 1980s, we had, in the 70s, we had moderately high inflation. Gas shot up from 40 cents, 60 cents up to over $1. We had super high interest rates. This was a fairly difficult time. And then we moved into lower rates and then finally lower rates here into the 1990s and 2000s, which brought CPI levels down quite a bit as destructions of monetary supply took place. So remember, when the higher interest rates and higher inflation periods, we get through these little bumps here. Now, what's going to happen in the future, I think, is this elevated level is going to keep the Fed active in trying to raise rates and maintain some pressure on the markets. I think we're looking at, maybe another half percentage point rate increase over the next maybe 6 to 8 months, maybe a bit more. We will see. But this higher inflationary process is going to create a bit of a drag on the markets. And you can see how it really took place here right in, late 2020, December, April, May. So really May 2021 started to really shoot up. And remember, that was almost a year after COVID, okay? When we started coming out of COVID, it really kind of shot up. So where we're at now, we're 3 months worth of pretty much flatlining at 3.3. And I think, like I said, depending on what happens in the first few months of 2025, we could see the Fed look to raise interest rates by maybe a quarter or 0.5% before April, May, June, somewhere around there. Okay, so now today we're looking at a flat down pattern, which we'll see how this plays out because we got a little bump in the markets right now after the CPI data. So this flat down pattern may result in really a kind of a rolling flat down move. Let me go down here to 2 hours, show you where we're at right now. The anomaly event is still in play. I know a lot of people are asking about it. And I'll take a look at that real quick if we have time. But let's go over the data first. So the SPY is right now up at 605.14. It's up 0.3% or almost 0.4%. So point again being that we're looking at a bump up, kind of like I drew here. Let me spread this out. And we're probably looking at, like I mentioned here, a bit of a rolling downward. So I would move this down to here, get rid of this. And you can see we've got this type of a rolling pattern set up here where we're going to potentially open in this upper area, maybe 605.5. And I think we just roll flat downward into this trend. Now, tomorrow we have a breakaway in carryover mode. And then we have a carryover trend. So looking at this, it looks like I've drawn these potentially incorrectly, meaning I may have inadvertently missed a day. So we have this carryover trend probably setting this up back over here and setting up our flat down in this type of mode. So I'm going to move these back by one. And our flat down, possibly like this. That looks better. Okay, so we're looking at a flat down pattern. Like I said, the markets have reacted already. They've shot up a bit. Now they look like they're reverting back down. I really do believe that if we get a peaking pattern like this, I think we're just going to basically be kind of a rollover peaking pattern here into December 17th. And that would be basically middle end of next week. And then I believe we could still roll to the downside with the anomaly event taking place. So be aware that, like I said, we're not out of the woods through the end of the year. We've got low volatility, and that could mean a rolling price pattern in the markets. Something I think that most people don't understand is that we're kind of reaching this euphoria, maybe a roll like this into Christmas. Okay. And the anomaly event could still see the SPY attempt to roll back down into, these pre-election type of time frame zone, price zone here. So could move us down into this 584 level, maybe a bit lower prior to December. We'll see. I mean, it hasn't shown up yet, but what we're looking for right now is we were looking for a lower price move to move into our buy hedge position. We don't have it. We don't have the breakdown yet. I'm not calling for the buy hedge yet. I will possibly move this out here, move this potentially out here, and move this potentially out here. We just don't have the buy zones. They haven't shown up. So we're waiting for it. Okay, now QQQ should be doing the same thing. Should QQQ here, 2 hour is up 523, up half percentage point. Spread this out, lock, zone it back in. So we are now trading up in this upper range here, which gives us the idea that we could see a rolling flat down pattern into today, setting up pretty much just a rolling consolidation period. And it will be interesting to see because, if we get this rolling pattern like I just drew, we could be setting up kind of an excess phase peak pattern right over here. Getting this high price move here, moving into flagging, maybe moving up a bit, and then rolling down into the end of the day and trying to break out. So this will be a very interesting morning to see how it plays out. Okay, so now let's go take a look at gold and silver. Gold is in a very interesting crush pattern here in trending mode. We are in bullish, bullish. Typically, a crush pattern would be a downward move in gold. I think we're looking at a pretty solid move to the upside here. I think the CPI data is enough to potentially send gold quite a bit higher. I'm looking for gold to try to move up into this 2800 area right now. So I really am looking to see if gold can move up into that area. We've had a nice little rally over the last couple of days. It broke out very cleanly, just like I showed here, A, B, C, D, E to the upside, just like I drew. Now I'm looking for this move to continue a bit higher. I'm looking for kind of a nice solid rally, maybe up to 2880. Sorry, 2780 to 2800. I think that's next for this move. Then we will stall out around this 2800 level. Let me redraw these as lines. I think we're going to see this move very quickly once this data settles for the year. And I think traders are going to be very surprised at how quickly gold reacts to move higher. So just hang tight, guys. We've got a nice solid rally setting up. And we're really looking at a good solid breakout here. So we're really looking at trying to get up into this 2800 area, and that's going to be the next big rally phase, in my opinion, for gold. Now, silver will follow gold. Silver is lagging, didn't get a move yesterday like gold did, but it will continue. In my opinion, it will continue to rally on upward, targeting up here to this 34.50 area, $35 area. That, I believe, is almost guaranteed at this point before the end of the year. Anything above that would just be gravy. Like I said, gold is trying to move up into this big expansion phase, which will put us maybe up into the 3,400 area. So remember, the expansion phase is quite large. We haven't even gotten there yet. And it's really going to be probably more along the lines of this, 3,200 to 3,400 area. So I'll mark it here roughly 30.50 to 35. So you've got that big expansion phase is next for gold. Remember, these are 4-hour charts. So once we break this rally, I think we're going to run into a little resistance right over here around 3,000. Obviously, a big psychological level. And once we get above that, we're going to rally up to probably 3,500, 3,475. And that would likely put silver, if we follow the same trajectory, up here into this $40 area. So understand that we're going to likely see silver rally up, stall maybe around 37, and then rally up into this $43 area. Okay, let's go over here to Bitcoin, 98.67. So we're looking at that flagging. We didn't get it quite yesterday. Let me get rid of these and this. And let's now go over our breakdown pattern. So we've got a new lower low yesterday here. Okay, this is a good solid lower low. And then we have a retesting of that low here. So we need to pay attention to how this is coming and retesting this low here. This sets up our range, and that was our 94,400 area. Okay. And again, that comes down to break this low. We did break that low, and then we rejected. Now we have a new high right back over here that plays kind of an important role for us as the most recent series of highs. We also have a high right here. And we have a high down here. You can see this, but this is our little unique high, and we just broke that. So what we have here again is building a base, rallying back up off of here. These upper levels are going to play an important role because this is our bigger range for this area here. And up here, we have this upper high. We need to be cautious at this point of a rollover in price, trying to come back down into this area. And the purpose behind this is we're setting up new lower lows. So in reality, we're in another downward excess phase peak pattern, rolling right across here. We're looking at a new low, pulling back. If we were to continue to get this extension to the downside, we would go ahead and see this roll up, roll back down. So understand that we're getting the same type of a pattern. We've broken out of this, but we have yet to get up to this high, which is what we would need to see to break to the upside. But at the same point in time, we've got this rolling pattern with a pullback into a new low flagging. So in reality, this is setting up across this low, rallying up into here, and then pulling back, setting up a new flagging pattern. And again, see how this broke down into our consolidation range. So here's our consolidation range. We are now flagging out in the consolidation range, which is roughly from here to here right now. And what we will do, we need to see this range either break out, and of course, we're in this upward channel. So, we could see it move up even further. But this consolidation range theoretically should stay below this level. This is the breakout below level of the consolidation range. So we're looking at this being our resistance area, which is 98,732 roughly, and we will likely see Bitcoin hold near this level, meaning coming up here, rolling, and then attempting to come back down and set this low, retest this low. So again, guys, it's not looking great for a big rally in Bitcoin yet. This level right here becomes critical. Let me go ahead and do this. 98,732. So we're really looking at a potential, if we get above this level with any strength, we have a potential upward move. If we stay below this level and roll, we're looking at a pretty solid rotation downward. Okay, so really, if we get above this level, we're going to try to come back up here and hit these levels. If we stay below this 98,732, then we're likely going to roll down into this area and try to break below this area. Okay, so again, very consolidated, flagging out in multiple excess phase peak patterns, and very likely to roll downward based on this new lower low trending over here. And what do we look at a lower low? Is it lower than this? No, but it's lower than this. Okay, and this is indicating that we're breaking to the downside, establishing new lows into our flagging consolidation pattern here, meaning that now we are essentially flagging back up, looking for the breakdown, and back down here. If we get the breakdown right here, this would then end up being consolidation before we potentially break downward. Okay, so we got a pretty good plan for today. Wanted to highlight some real good opportunities for you guys. I'll show you some of those a little later, maybe tomorrow. But remember, we're getting some pretty good runs in the market, and there's a real opportunity for you with the right tools to try to target, 1.5, 2.5, 3% a day. And if you know what you're doing and you know how to time the markets, and you pretty much can identify the opportunities, which I have available on my, well, I can't show you, but bottom line is, please take a look at my profile and learn about the resources that I have available for traders. It's very important for you to understand that we're moving into what will likely be a fairly solid growth period into 2027. I think I showed you that earlier. So let me show you this. The crash index is moving downward, just like I predicted, moving into this gap window. I think we continue to move downward. So I'll be honest with you. I think we continue to slide into lower channels into the end of the year. Okay. So somewhere, I didn't mean to draw it like that, but somewhere into maybe these lows by the end of the year. The dollar is slightly, elevated up near the 105, 106 level. Gold is starting to move quite a bit higher, and the SPY is rolling over. The move that I highlighted last week that the Fed did not want to see this dollar number raise, this money flow index raise, it has now consolidated. This is an indication here that, the Fed's lowering of rates and the spark in the economy post-election has now moved into, essentially a deflationary type of trending for money flow. I think this is going to mean that the Fed is going to be stuck. Again, the U.S. markets are raising rates because of inflation, and global markets show that money flow is weakening. So we need to pay attention here, see what actually happens. In the meantime, like I said, SPY is stalling and rolling. So we get this pattern here. You can see this pullback. If we get this rolling pullback, like I've shown right here, this is going to set up another beautiful excess phase peak pattern. And if we stay below this high, we are likely going to see a roll downward into the anomaly pattern, just like I suggested. Okay, guys, that's it for now. Talk to you later.